Big trouble are coming for Italy's crypto sector. Tax hikes threaten to devastate the industry. And will this be the death for crypto in Italy? Stick around as we dive into the details and reveal what this means for investors, crypto businesses, and the future of digital currency in the country. Welcome back to the channel. I'm Zach from Emifast and we're the Dubai-based leader in global tax reduction and reincorporation strategies. You can find out more on our website. In today's video, we are diving deep into a critical issue that is shaking up the Italian crypto sector. Italy is proposing a massive tax hike on the cryptocurrency capital gains. And if this goes through, it could have devastating consequences for the industry. And before we start our discussion, let's do a quick overview of how early adoption, initial interest and regulations unfolded in Italy. Italy, a country that is known for its rich history and economic influence in Europe, has seen significant developments in its crypto sector over the past decade. Now, while cryptocurrencies and blockchain technologies have disrupted global financial systems, Italy has gradually embraced these innovations, but with varying degrees of government regulations and public interests. The rise of Bitcoin in 2009 marked the beginning of the cryptocurrency revolution, but it wasn't until the early 2010s that the crypto industry started gaining attention in Italy. Now, the early adopters, including tech enthusiasts and entrepreneurs, began to experimenting with Bitcoin and other digital assets. Now, however, Italy, like many other countries, had little to no regulations or understanding of how cryptocurrency should fit into the traditional financial system. And in these early years, there was a growing underground community of crypto miners and traders, but there was limited interaction with the broader financial ecosystem. Many Italians saw Bitcoin mainly as a speculative asset and an alternative form of investment with limited practical use for everyday transactions. By 2016, Italy has started to pay closer attention to the potential of blockchain technology and the digital currencies. In 2017, the Italian government officially recognized Bitcoin as a legal asset, but it was still not fully integrated into the formal economy. And the Bank of Italy and Consob, which is Italy's Securities and Exchange Commission, began issuing warnings about the risk associated with investing in cryptocurrencies, advising caution but not imposing severe restrictions. And in 2021, Italy's Minister of Finance proposed new legislation aimed at tightening regulations on cryptocurrencies transactions and focusing on anti-money laundering and KYC's measurements. Now let's skip a couple of unnecessary years and move to the current year 2024. Italy's Deputy Minister of Economy announced a plan to increase taxes on crypto gains from 26 to 42%. And this would only affect the crypto sector, so meaning crypto sales would face a far higher tax rate than other financial assets. And this tax hike has left many in the Italian crypto industry deeply worried, as they fear this could hurt their businesses and innovation around cryptocurrencies. But why is this such a big deal? The crypto sector in Italy has been growing rapidly, with over 150 virtual asset providers registered in the country. In 2024, more than 1.3 million Italians hold cryptocurrencies. And in fact, the crypto sector in Italy generated 2.7 billion euros in income, marking an 85% increase from the previous year. And this is really not a small industry, and such a tax increase could have a huge knock-on effect. And the concern here is that new tax measurements could make Italy less attractive to investors, startups, and tech talents, pushing them to seek more crypto-friendly environments like Switzerland, where capital gains on crypto are not taxed. And if this happens, Italy could face a brain drain, where talented individuals move elsewhere. This potential capital and talent exodus could significantly harm Italy's competitive edge in the tech world and stunt its digital economy for years to come. And some even predict that it could reduce tax revenue in the long run because wealthier investors are the ones that are leaving, most likely. Luckily, not everyone in Italy is on board with this tax increase. Giulio Centemero, a member of Italy's Lega party, is actively working to block this proposal by introducing an amendment in parliament. And while the measurement has not been approved yet, the parliament has until the end of this year to finalize Italy's financial strategy for 2025. So the clock is ticking and Centemero efforts could change the outcome. And as if this tax hike wasn't enough, Italy's crypto industry is facing additional pressure from both the European Central Bank and Consob, which is Italy's financial regulator. High-profile critics, including Ulrich Binsa and Jürgen Schaaf from the ECB, have spoken out against cryptocurrency, arguing that they offer no productive economic value. Their comments have fueled negative sentiment against crypto in Europe, adding to the challenge that Italy's crypto sector is already facing. And the big question remains, what does the future hold for Italy's crypto sector? If the tax hike is implemented, we see way more companies and investors fleeing the country, which could cripple Italy's potential lead in crypto innovation. On the other hand, if Centimero amendments succeed and the tax hike is stopped, Italy could retain its position as a thriving crypto hub in Europe. For now, all eyes are on the parliament to see whether this amendment will be approved and if it will change the landscape of crypto in Italy. So what do you think about Italy's proposed crypto tax hike? Will it destroy innovation or can the industry survive? Let us know your thoughts in the comments below, and if you find this video helpful, don't forget to like, share and subscribe.